So I think people are building their businesses right now based on the reality of today, the financing of today. I'm curious how you see, where you see this going. I just had a conversation with a guy that I know. He owns thousands of doors of multifamily property, and he started in 2010. Never owned a property before. Bought his first property and jumped right into multifamily. From 2010 to 2015, bought thousands of doors, and now this guy looks like an absolute genius. He's sitting on, massive wealth because that whole time the rates dropping, he's refinancing, he's obviously improving the properties and making them perform better. And so the value of commercial property particularly is based on the performance, right? So the better you can make it perform, and then also the lower the interest rates are, the better it's going to perform because your cost is lower. So we're at this point now where interest rates are about the absolute lowest they can be, right? They can't drop it anymore.
If you haven't refinanced your home yet, you probably should, right?
Yeah, exactly.
Into the twos.
Yeah. But everybody's buying, especially commercial property, based on today's reality. And so I asked him, I said, the problem I have with commercial property and why I've stuck to primarily single families is because I could put up a sign and there's somebody who has a hoarder house that they want to sell, and that's an opportunity, or somebody inherited a property across the country and it's ugly and they don't want to deal with it. So I can find these opportunities. Commercial property, it's like whoever's going to pay the most and hope that conditions improve is going to get that property. So we have all the commercial property today is financed at today's rates. And I said, what if the rates go up 4 or 5%, over the next few years, which isn't, that's not a crazy amount, but it's like
not unheard of,
300% higher than it is today, or 400% higher. So that would absolutely decimate the numbers. You couldn't sell, you couldn't refinance any commercial property. And he said, it won't happen. And I was like, what? It won't happen. And he's like, it can't happen. He said, every single commercial owner would have to give their property back to the bank. He said, if that happens. So it's basically this like too big to fail mentality. And maybe you have a different take on it, but that doesn't give me comfort as a commercial owner that, it just can't happen because it would ruin everybody. So they won't let it happen. Do you foresee, where do you foresee this going from here? Because we can't go down anymore.
Down in interest rate?
Yeah, right.
I guess we could. On the commercial side, we could. I've seen it go from, the 6s to the 5s, and now we're talking about being in the 4s. I don't know how, how low does it go on the commercial side? It all has to do with securitizations, and there's so much liquidity that needs to get some yield.
But I'm saying we can't drop, the Fed can't drop the interest rate anymore. So we could push it down, on particular loans, but, at some point, that the lender has to be compensated something.
It's always an interesting thing to talk about, where are we going to be?
Yeah.
I figure I literally have no idea.
Yeah.
Is my most authentic, honest answer. What I try to do, and what I think real estate investors should do, is stick to what you're good at. Don't get over your skis. If you can lock, this is why I encourage people, if you're looking at a 2 rates, and one's a 5-year balloon and one's a 30-year fixed, and the 30-year fixed is, 50 basis points higher, you should probably fix it, right? Because you don't, maybe in 5 years, you could you'll have to refinance again. And maybe there's available capital, maybe it's lower, but why would you take that risk? So I think what you have to do is set up your business to limit your future exposure, right? So I think, look, if you're not growing, you're dying. That's one principle. So you can't just sit at home and do nothing.
Yeah.
Right. But in order to continue to grow your business, you just have to be smart about it. And okay, so what are the risks around the corner I can control? I can try and fix my debt. I need to stick to my numbers and maybe have instead of just looking at today's cash flow, what if I have a little bit of a sensitivity analysis around, okay, what if rents come down 10%? What if they come down 20%? Right? I mean, everyone typically has the belief that housing is going to exist.
Mm-hmm.
It's not going to go away. So, how can you make sure you can just weather a storm of getting through a decrease in rents? So on the other side of 08, you and I have not seen increased rates yet. Actually, I think it happened for like maybe 2 quarters in a row, very slightly.
Yeah.
Somewhere in the middle of here in 08. And we haven't seen prices come down. Again, maybe once or twice, there was a short period where it came down a little bit. My guess is at some point between this year and the next 5 to 10 years, we're going to see rates probably go up, and we're going to see some prices come down, whether it's rent or housing prices. So, you could basically go home now and do nothing, right? That's one way to mitigate the risk. Or you can just, like I said, I think you got to just view your business and buy right. I love the rehab space. I know it's, for the real big money, it's kind of a pain because you might just buy an asset, right? Because you're actually more of a money manager than an asset manager at that point. But for people like you and I, we want to add value to the property. So look, if I'm into a deal for 150 grand and it's worth 250, right? If it comes down to 200, but it's rental for me, it doesn't really matter. Right? I just don't want to go pay 250 for it.
Yeah.
So that's why I love the rehab space, because you're adding value. Mm-hmm. And I think until you have so much money, where you can be a true investor, probably just invest their money. Right? Most of us are on our boots on the ground trying to add value to stuff. And I think that's where we're going to make our money. I think that's where you de-risk your deal a little bit, right? Because you're willing to put in that work, increase the value. And generally speaking, you're probably having a really good debt service on the property.